Hello and welcome back to CEO.CA's Inside the Boardroom. My name is James Fetham, and today I'm joined by Stephen Stewart, CEO and Director of QC, Copper and Gold. Stephen, thanks so much for joining us today.
Thanks for having me, James.
So let's kick things off. You've been on a bit of a spending spree lately, a couple of acquisitions. I want to start with Cuprum first. Obviously, big acquisition announced a couple of weeks ago. Walk us through the backstory of that deal. How did it come about?
Sure.
Why is now the right time?
So now's the right time to be acquiring assets, just generally speaking across the board in our industry, provided you buy the right assets, and buying Cuprum is the right asset at the right time, especially for QC Copper and Gold. For those who know QC and Copper and Gold, we have the Opemiska. We own 100%. It's the highest grade open pit copper deposit in Canada. It's moving forward towards the pre-feasibility stage. That is our goal. That's our objective, to achieve that. In the meantime, we were looking for growth opportunities. We've been looking in our neighborhood in Chibougamau, but we also came across this opportunity a little while ago called Cuprum. And Cuprum owns the Tieri copper deposit, which is the largest copper deposit in Ontario. Got our attention. It was acquired out of a distressed situation. It's an asset that's been around for a while, but has never really been within a company that's had the ability to allocate capital, time, love, attention, and money. These are things you need to move assets forward. So it's why we like Cuprum, or the Tieri asset, is because it's large. It's going to get bigger. It's wide open. It's got a high-grade copper deposit. It's got nearly 25 million tons at 1.6% copper, with nickel credits on top of that in the underground component. And then it's got something about 3 kilometers to the east called the K2 deposit, which is near surface, bulk tonnage. It's on the order of 50 million tons and wide open at depth. We've had some wonderful drill holes in the past year to sort of indicate that it's wide open, and it's going to get bigger. So the idea is to get bigger, to provide the company optionality, and do so at a time when you can get a lot of value, a lot of bang for your buck right now in the market for patient capital and those who have the ability to determine where quality is and may be overlooked. So the gist is QC Copper, when the deal closes, we're going to be rebranded, of course, called XXIX. The company's going to have nearly 5 billion with a B pounds of copper in the ground, 43101 resource. We're going to be well financed. We're going to have about $7 million in cash on closing, plus probably close to $10 million in working capital, and a very clear plan to develop both the Opemiska towards the pre-feasibility. PEA obviously comes first, and then with Tieri, we're going to come at it with a very aggressive drill program in 2025, and then it's about a year behind the Opemiska in terms of its development plan. Both goals are to develop pre-feasibility studies. That's where our focus is.
Okay, fantastic. Thank you so much for that overview. I guess I want to talk a little bit about the drill plans you have at Tieri, but maybe first, could you walk us through some of the terms of the Cuprum deal?
So it's an all-share deal. QC Copper is offering a 15-cent price to all Cuprum shareholders. Again, it's a private company. Cuprum did a recent financing which valued the company at about $10 million, and now QC Copper is offering $12.5 million in an all-share deal. So it's a 25% premium, which is fairly standard commercial transaction. But I think with additional capital, time, and development, and of course drilling, that $12.5 million is going to be worth many multiples of that. But it needs time and it needs attention, and QC Copper's team, our team at the OR Group, is the right team for the job.
Great, and you touched on aggressive drilling plan for 2025. What are some of the goals there? What do you have in mind in terms of a drill program?
So I think the lowest hanging fruit on Tieri is the open pit K2 deposit, which is the bulk tonnage. It's wide open along strike. There was a series of drill holes drilled earlier this year, was drilled underneath it because it's only been drilled shallow to 150 meters. We drilled underneath it, and we got 200-meter intersections, 100-meter intersections of nearly a full percent copper equivalent. Very interesting stuff. So it appears to be getting wider and deeper at depth. It's open towards strike on the east, the west, and the east. And the really interesting part, which really gets us excited, this is blue sky, is that if we can actually connect the underground and the open pit deposits, they're only 3 kilometers apart. There's some geophysical signatures right in between, the type of geophysical signatures that we like to see that match the signatures of both other deposits, but it's never been properly drill tested. So there's an opportunity to take that strike of the open pit and connect it with this already large 25 million ton high grade 1.6% copper resource. And again, all of it's on the rail, the road, the power. It's in a mature mining district of Pickle Lake, Ontario, which is a storied mining area, which is better known for gold, but it just happens to have this wonderful copper deposit right in the middle of it.
Okay, yeah, I was going to ask about that. So as part of the Cuprum deal, the rebrand to XXIX Metals.
That's right.
See the atomic symbol for copper. But you've also just closed a gold deal, which we'll get into in a moment. But I guess what does this rebrand represent for the company?
So the rebrand just represents, the company refreshed. Every now and then, I think it's a good opportunity to sort of reposition the company, and now is the time when we acquired an asset that's outside of Quebec, because QC Copper obviously was focused in Quebec, which is one of the best jurisdictions, if not the best jurisdictions in the world. So we were very much Quebec focused. Now we're going to be focused also in Ontario. So we thought it was a good opportunity to rebrand it, and I thought it was an interesting idea to be different. And XXIX is different, it's unique, and so it evokes a response. People remember it. We obviously, it's the Roman equivalent of 29, which, as you said correctly, is the atomic symbol for copper. It's going to be our new ticker symbol. So it's going to be sort of symbiotic, or it's going to be all sort of, it's going to coalesce quite nicely, and I think people will remember it, and we'll look forward to moving it forward and positioning the company under that brand.
Okay, fantastic. Well, look forward to that refresh. I guess let's talk about Roger Gold Project. You were originally a 50% shareholder in that back in 2021, just announced the intent to close the remaining 50% of that. Walk us through the vision there, and again, why is now the time to be going after gold assets?
Well, it's a time to be going after high quality assets, period. I almost don't care if it's copper or gold, although we certainly do focus on those as a broader group, and certainly within QC Copper. As we say, we're focusing on, our XXIX is copper, now we buy a gold asset, but it's always been in the family, so to speak. As you said, we first acquired the position back in 2021 from a company that was exiting Canada and focusing on their asset in Africa, which has since been sold.
Okay.
And so that's where we acquired the 50%. The other 50% was owned by SOQUEM, which is the Quebec government. They're very well known, and they made it be known that they wanted to vend the asset to an operator and a developer. And so it was just a function of getting the right time and price. And as I said, right now is the time. And so we will be acquiring 100% interest in it. We haven't really spent a lot of time and energy on it since we initially acquired it, mostly because of the structure of the ownership. It was, if we don't own something 100% and there's a joint venture, we tend, to defer our attention and allocate capital elsewhere. But now that it's ours, we'll own it 100%. Expect us to develop it. It's a gold deposit, so it's got about 500,000 ounces of gold in a 1 gram gold, so it's low gram gold deposit. But it's adjacent to one of Northern Superior's asset that they have a resource there. It's adjacent to our friends at Doré Copper, who just had announced a big deal with an Australian group. So I categorize that as the eastern part of Chibougamau, whereas Opemiska is the western end of Chibougamau, which anchors the asset there. There's another sort of hub over there that arguably is synergistically from an operational standpoint. Whether it is or it isn't, it represents great value. We bought the second half and the first half at a very good price. And we've deferred it so that it's the balance, the vast majority of the payments are share-based, and we've deferred it over 1, 2, 3, and 4 years tranches of payments on the anticipation that our share price is going to go up. If our share price goes up, our cost of capital goes substantially down. So we could be getting it at, it's a good deal at today's price. If we double, triple, quadruple, who knows, then it's going to be that order of magnitude cheaper for our shareholders. So we love the deal. We love Chibougamau. It's been overlooked. It was a huge producer of copper and gold through the 20th century. And we believe it has that same opportunity, but do so in a different context in this century, the 21st century.
Okay, fantastic. Well, certainly a nice addition to the portfolio. I guess I don't want to forget about Opemiska, made a resource estimate updated in January 2024. What's the plan there? Is it going to remain the key focus? Tieri is now going to be the focus. Are both going to be advanced simultaneously? What can people expect in terms of Opemiska updates?
So specifically in Opemiska, in January, we published our updated mineral resource estimate of 100 million tons, pit constrained, nearly a full % copper equivalent, 0.8 of that is copper. So it's very copper rich relative to other copper deposits, but certainly a lot of gold and silver in that as well. What our plans for that is in the first half of 2025, we're going to come out with a PEA. But really, again, it's not just about the PEA. We are laser focused on the pre-feasibility study because that is where the rubber meets the road in terms of being able to ascertain, is this a project that's going to, is it a mine or is it not? That's what a pre-feasibility does. PEA is just desktop. It's not good enough. It doesn't get valued appropriately in the market. So that's where we're focused on. That's where we see the re-rate. We'll move that forward. And Tieri is, as I said, about 12 to 18 months behind it, but it's going to have 12 to 18 months worth of lots of drilling. So sexy growth. We're going to publish an updated mineral resource estimate towards the latter half of 25, maybe early 26. We're still sort of fine-tuning that, but that's the idea. And then it goes in a parallel track of, again, going towards the pre-feasibility, because that's the only report that matters. Okay?
Yeah.
You have to go through the PEA in order to get to that next stage, and you stand on the shoulders there. But that's where we're focused. That's how we're thinking. That's where you get the re-rate. If you look at our presentation, we draw parallels to us and our both assets towards Foran. And Foran's been a wonderful story. It's made a lot of people a lot of money. It's a nice deposit. But there's nothing that they have that we don't have in either Opemiska or Tieri. And the market hasn't recognized that yet, but that's our objective is to get them to see our metal endowment, our access to infrastructure, our grade are really unparalleled in both these assets. We have the opportunity to create a huge amount of value if we achieve our milestones and if the reports come through like we think they can, and if we are in the early stages here of a turnaround in this industry, which is what we've all been waiting for, then things really could line up.
Yeah, absolutely. Well, sounds like there's a lot in store across multiple projects here. I guess, what's the Treasury looking like at the moment? Are you fully financed for any of these imminent programs, looking to raise again? Paint us a picture.
So when the deal closes, we'll have about $7.5 million cash in the combined XXIX new entity. Plus, we'll have our position in baseload energy, which QC Copper's held for some time. We've got about 11 million shares in that company, which has about $10 million in its treasury. It's drilling, so there's lots of value there. One day we'll realize and harvest that value. In terms of being fully financed, well, any junior mining promoter will tell you we're always raising money. It's just a function of when and at what cost. So the good news is when you do have a treasury like ours, you can afford to be patient, wait for your timing, hit key milestones, and just wait for your opportunity. So we're not raising money, at this very instance, but we're always raising money because we need money to reinvest into our projects. Opemiska, the PEA is fully funded as is, depending on how big and aggressive a drill program on Tieri, which I absolutely want to do. That comes into question. When do you want to finance that? But we certainly have plenty of money to get started and see us through the foreseeable future.
Okay, excellent. I guess we'd love to hear your current investment thesis. You mentioned this being the kind of golden hour right now for looking at assets in terms of this lag between high commodity prices that aren't reflected in juniors just yet. I guess what's your investment thesis for copper and gold, and then what's your investment thesis for XXIX?
Sure. Well, copper and gold. First, don't buy shares in XXIX based on my opinion of copper and gold in the macro. Okay. I'm just guessing like everybody else.
Appreciate the disclaimer.
However, I always like to say, I use Peter Monk's saying on commodity prices, that nobody knows where it's going, but you need to take a long-term directional bet. And our long-term directional bet on both copper and gold is that they're going much, much higher. The caveat there is I expect costs to track as well. Okay, so it's not necessarily an expansion of margin, which is really all you should be caring about as a mining company, but it's expansion of price, but also costs. Now, so the focus becomes on where can you build things and develop things cheaper. And I think when you have access to infrastructure, you don't have to go into the mountains and you don't have to go into the desert. You can build things faster and cheaper, better bang for your buck. But getting back to your point on copper and gold, we're extremely optimistic. Gold has had a very exciting run as it runs north of $2,700, and copper has been sort of high beta lately. But I think copper's got a very bright future. I don't necessarily believe in any one narrative that is being conveyed, and whether it's EV or AI or whatever it is, it's got a high utility value in terms of how we live our lives, over the past 100, if not a millennia. But also, I think it's becoming more and more significant as the world becomes developed, becomes more wealthy, and grows in terms of population. So copper, outside of iron ore, is the most utility metal. And so we've expanded our position, not just in XXIX, but also in our group. You know, we have American Eagle, big copper exposure there, Metal Energy, new copper exposure there out in British Columbia. So we are buying copper. And let's face it, I always loved gold. That's how I got in this industry. So we'll always be cognizant of gold opportunities as they come our way.
Okay, excellent. And I guess just to wrap up, is there anything that we haven't touched on that people should know about QC Copper and Gold or XXIX? Any other maybe catalysts or potential investment factors?
Well, I think, again, I'll go back, and a forward-looking statement is look at our in situ value, look at our pounds in the ground relative to where we're trading. I think we're overlooked. Look at our comparisons. Look at Foran. Again, I think those guys have just done a phenomenal job at taking an asset. And Foran is an interesting example because it wasn't too long ago when they looked just like QC Copper did. They had a 13-14 cent stock. They had a sizable resource, but they just didn't get traction. And then they published a PFS. And then you'll see since then they've just raised $100 million, $200 million. So that's about capital and their access to capital. They've done a wonderful job developing the asset and financing it. And that's what our plan is going forward. But first, we need to light that fire, get some attention on the company, lower our cost of capital, and then the sky's the limit in terms of where we can go. They've got one asset that's being valued, or one material asset that's being valued at $1.7 billion. And it literally was in 2001 where they were a $20 million company. So that is the type of opportunity that the junior mining industry provides. It's very attractive, but it's also very risky. So again, these are all sort of things that we see are possible, but we've got a lot of challenges ahead of us. But the good news is we've got an excellent team, technical team led by Guy Lebel, who's our president, Charles Beaudry, and Denny McNichol, our three key technical guys. And me in the background, moving things forward and raising the capital and talking to all sorts of strategic partners, because we have a lot of strategics that come through our doors, through the OR group doors, and all sorts of manners. And so I think it's absolutely critical, to develop the relationships and interests in these assets to finance our efforts going forward.
Excellent. Well, Stephen, congratulations on the two latest acquisitions. I'm sure it's been a busy time and sounds like there's lots more work planned. Look forward to having more updates from QC, soon to be XXIX, in the coming months.
Lots to come. Thanks, James.